Well, hey, welcome back. Today we're going to be talking about how to start investing in multifamily real estate. So, in other words, apartment buildings, anything from 2 units up. That's what we're talking about here today. So, today we're talking about getting started in apartment buildings, 6 simple steps, including the right kind of properties or the right location for you, and a simple hack for getting some experience very quickly and creating credibility. So the first thing that you need if you're going to start buying apartment buildings is knowledge, education. You need to know what the heck you're doing, right? I've seen people charge in without the faintest clue of what they're doing. It turns into a disaster. So get the basis down first. Get some education. What does that look like? Well, it can be as simple as going to your local library and taking out a few books, buying some books, getting them on your Kindle, what have you, listening to podcasts, attending webinars, talking to other investors that are doing multifamily in your local RIA or real estate investment club, taking training, buying courses, taking coaching and mentoring. I highly, highly recommend all of that. In fact, the more that you do of that, the better, within reason. Like, don't get stuck with analysis paralysis. Take action as well. But a quick shortcut to that is finding a good coach or a mentor to help you along the way. They've done it before. They're doing exactly what you want to do. They can help you get started on the right track and avoid making some of the common mistakes a lot of people make. The second thing that you want to do is get some focus. You want to focus on the size of properties that you want to really start investing in and the location of those properties. So what do I recommend? I recommend that if you're just getting started, or perhaps you've got a little bit of experience doing single family homes or condos or what have you, is start small and build up from there. It just makes sense, right? Instead of charging right into a 100-unit building that you're not going to have the faintest clue of what to do, perhaps you want to take a look at a duplex or a triplex or a fourplex. Any of those kind of properties you can get into relatively simply as a mom and pop real estate investor. In fact, if you're really sharp, you'll house hack those kind of properties. You'll get into those properties, you'll live in one of the units, you'll get really, really good financing, a low down payment to get into that property, and you'll get the experience of managing the property and the tenants, because that's going to do you in good stead for scaling things up afterwards. And the other part of that equation is you want to really get focused on one specific location. You want to pick the size of properties that you're looking for and where you want those properties to be. Why is that important? Because that allows you to really narrowly focus your attention. And where attention goes is where the energy flows, the old saying goes, right? So if you really become focused on one particular kind of property in one area, then you're going to know exactly what you're looking for. You're going to be able to find the right realtors to help you out, the right power team members, property managers, etc., because you are focused and specialized. Then the third step is you need to start looking at some deals, right? All that education is great. All that specialization is great, but if you're not looking at deals, it's all for naught. So start looking at deals. Even if you're not going to be making offers on properties, try to get all the information you can, right? Start looking at deals, analyzing the numbers, crunching the numbers, seeing what the good part of the deal is, what the not so good part of the deal is. Here's a quick tip for you. Usually any kind of information that you're getting about a multifamily property, just assume that there's sins of omission there, that they're missing some stuff, or either on purpose or by accident. So get really good at analyzing deals and never trust the realtor, never trust the seller either. Always reconfirm the numbers. So start doing some of that analysis. I know that Robert Kiyosaki in his book, Rich Dad, Poor Dad, or some of his training, can't remember which one, talks about the fact that, hey, you need to look at 100 deals, make offers on 10 of them in order to actually be able to close on one. I don't know if you have to do quite that much with multifamily, but it's a good idea to have that in mind. Look at a lot of properties, get good at analyzing numbers quickly, and then when you see one that looks promising, laser focus in on that, and maybe you're going to have really 10 really good hot ones to look at, and you might make an offer on one that gets accepted. The next step is to get in on a real deal. So for example, if you're not going to house hack and start with something really small, if you want to jump into something bigger, then what I'm going to recommend is that you be the partner for somebody else on one of their deals. So go to your local RIA, Real Estate Investment Association, real estate club, what have you. Find other people who are actively doing multifamily deals and see if you can partner up with them. See if you can joint venture with that active real estate investor. And what you're going to bring to the table is one of two things. You're either going to bring money to the table, or you're going to bring a skill set and effort and work to the table. But you're not going to work for a paycheck. You're going to work for a little piece of equity in the deal. If you're bringing the money to the table, then obviously you're going to have a piece of that deal. You're going to have some equity in that deal. But here's what I want you to do. I want you to tell the person, hey, I don't want to be a passive investor in this. I want to be active. I want to pay to play. So I want to help out. I want to get my hands dirty. I want to get right in the thick of things. I want to be responsible for some of the things that go along with this property and see how the real deal works from the inside out. So not everybody's going to want you to do that, but find a joint venture partner that's open to that and say that, hey, you know what? I really want to get the experience of doing this. I want to end up doing this kind of stuff myself. And somebody will go for that. Now, while you're doing all of this, you also need to start building up your power team. So here's a quick shortcut for you. If you joint venture partner with an active investor who's doing these kind of deals, you can use their power team. Chances are they've already got the inside scoop on the best realtors, the best finance people, the best property managers, the best inspectors, the best appraisers, all of those kind of people. So instead of starting from scratch, you can just tap into their existing team. Because here's the good news. The team is not exclusive to that person. A realtor works for everybody. A property inspector works for everybody. A property management company works for tons of other real estate investors. So you don't have to feel like you're stealing anything from anybody. You are just finding a shortcut to a vetted group of professionals. And then step number 6 is you need to start getting the word out about what you're up to with multifamily investing to a group of potential investors. Because here's the thing, unless you just want to do one deal, sooner or later, you're going to have to tap into other people's money in order to grow your portfolio, to expand your real estate investing business. And the best time to start doing that is before you've got a hot deal on the go that you desperately need capital for. In fact, the goal is let's get you a bunch of investors lined up, ready to go, waiting in the wings for your deal so that when you do get one, you know that you've got the capital that you need to close on it, right? So lots of different ways to do that. I've got a whole thing called the Money Partner Formula, all about attracting investors instead of chasing after them. And I'll tell you about that in a second. You get a free copy of my book. Let me tell you about one of our clients, William Clark. So William, when we first started working with him, was just kind of transitioning from small deals into smaller multifamily type properties. And he ran out of cash, ran out of credit, like most of us do. He needed to start tapping into other people's money. So we worked with William very, very quickly, got the word out about what he was up to, and started generating that interest before he had the deal. Now, here's what happened. William did a really good job with doing his investor meetings, investor presentations, getting people signed off on expressions of interest. So when he did have the next deal come up, he had more investors than he needed. So now he's got supply and demand going in his favor. He's got more investors lined up than he actually needed. So the investors that couldn't get in that first deal are really anxious and excited to get into his next deal. So now he's got those investor ducks in a row ready to go for his deals. That's what we want for you as well. So if you like the idea of getting your investor ducks in a row ahead of time, getting the capital lined up before you've got the deal so you don't have to be desperate, then get a copy of my book. It's called Money Partner Formula, and in it I explain my entire process for attracting instead of chasing joint venture partners. You can get that by clicking on the link in the description below or visit the site investorattractionbook.com. Get your copy today.